Hello everyone, welcome to EliteWave-Forecast.com YouTube channel. My name is Henry. Today is Friday, January 31st. The time is around 4 a.m. GMT. So today we will be looking at the chart of the Dow. This is a 30 minutes chart here. Okay, and alright, so what do we see here? What we see here is the idea that the current decline has ended here as a wave 4, and that means we have already started the wave 5 if that is the case, right? And we will talk about, as always, alternate paths and some other consideration and so on. Now let me point out a couple of things from this 30 minute chart. The first observation that I want to point out is the idea. I think this one looks impulsive to me, with very well defined extended rally, especially this part here. Okay, so this looks to me is a pretty well defined and impulsive structure here. So again, of course, we will go with the trend. The trend has been always going up. There's no reason to pick the top for us, at least. And we will just go with the trend until the trend ends, right? We would rather be wrong 1 out of 9 times, rather than wrong 9 out of 10 times, or even higher, right? So we will go with the trend, and we will take the most aggressive view, calling this wave 4 completed. Now, why would I say it's the most aggressive view? Well, if we go to the larger degree, okay, this is the wave 4. All right, this is partial label. Of course, this is wave 4, and this is 1 and 2. I'm going to copy this to the 4-hour chart to give you a better idea. So if this is the 4, then this is the 3, right? So that means it is the most aggressive view, in the sense that in order for us to be sort of 100% sure this is not going to drop again in any other way, is only if the Dow breaks above this wave 3 right here, which is not yet. But we decided to take the most aggressive view because that's where the direction of the trend is. Another consideration is the idea that if you look at this drop here, right, even though it looks big, but it doesn't look like a 5 waves to me, right? I mean, it doesn't really look like a 5 waves, even though it looks big. It looks more like a corrective sequence, corrective structure. Okay, and also if you look at the 1-hour chart, you notice here that the low here, right, the low here comes without divergence. Now if it is really a 5 waves, you will have a big divergence between maybe your 3 or your between 3 and 5. But I really don't see any divergence here, which is telling me that most likely it is not a 5 waves, right? And that's why we are not calling it as a 5 waves. We are calling this as actually it's a double zigzag, ABC with the WX here and ABC. So if I go back to the 4-hour chart, let me show you where the W is. So this is your W here, and this is your X, right? So you got a double zigzag in which you got a ABC here, and you have another ABC here. So that is a corrective structure, right? A double zigzag is a corrective structure. Now again, we are trying to assess which one is the most the higher probability, and really it's all about the analysis and the logic behind behind the structure, behind why we label it as it is. So it looks to me that if the structure is not really an impulse, right? And also if you notice here, if this is my connector, my WX, then we actually hit the 100% in the Dow. We hit the 100% and then start to bounce from this area, which is typically a sign that it is a corrective pattern. So if you agree that this is a corrective structure, right? If you agree this is a corrective structure based on what I explained, then that means the trend so far has been higher. So there's no reason not to call it aggressive, right? I mean, it has to be the most aggressive call. Okay, this cycle is finished, we start to bounce, so therefore call this completed, and now we have started to rally higher. But the final confirmation that really it is going to extend is only if it breaks above 3. Otherwise, the alternate can be that we could be doing an ABC. and then reach the 100%, fail and drop again without breaking the previous high. So let me show you what the short-term 100% target is. So this is the short-term 100%, which is 28,923, right? So this area, let's say if the Dow is, instead of doing a 1 2 and then starting the next leg higher, let's say the Dow decides to do a bigger pullback, then that means after hitting this 28,923 right here, right after it hits 28,923 as an ABC, it will drop again and will drop this previous low, and then it will do a bigger pullback from the peak. So you will do another sort of a WXY structure here to go down, and then the next area here, the next 100% extension is going to find another support from here. Okay, so that is the idea. But then yes, a double is possible, but again, like I said, if you go with the trend, the idea is you want to call it the most aggressive with the trend, right? To give yourself a chance. So that means for now we are calling it like it is, that this is already starting the next leg higher. But as you can see, that's why the arrow is still black, because we have not really gotten the confirmation of a break above the previous peak. But at the least, if we are just talking about shorter cycle, we can say that okay, this looks impulsive, and this looks like it is quite visible. It is quite high probability that we can at least hit this area around 28,923, 29,000, and then from there the market is going to decide whether we will continue, right, to continue to rally higher, or whether the market is going to fail again and then starts to turn lower again from the area. Okay, so hope this analysis is useful for some of you, and as always, if you do like the video, please do like and subscribe, and I will provide also the link for the free trial in the description of the video, as well as some promotion that we got. So see you all again next week, and have a nice day, everyone.